Hey, Jim here. Google actually had earnings last week. They beat earnings and beat revenue. They did give okay guidance, but it must not have been what Wall Street wanted to see. They did get knocked down quite a bit. They're currently trading just shy of 169, which I think is a great entry point for both selling puts and calls. I'm going to talk about some recent trades I made with them and some great opportunities to run the wheel on them or even run the new wheel that I call my shielded wheel. So stay tuned. I think you're really going to enjoy what I have for you. Okay, so what I've done is I've opened up Google within Seeking Alpha. Um, those of you who've been watching me on my channel here know that I really like Seeking Alpha. It's one of the tools that I feel is a great fundamental tool. It's great for identifying good companies who have good profitability, growth, dividends. You can pretty much find everything you need easily and quickly. So here, let's look at Google. They actually, at one time, were up in the high 190s. They got up to almost 192 and now have dropped down quite a bit to 168. So I really like them around the 160 level. You can see here they don't have a crazy PE. It's right around 22. So at 160, it would be right around a 21 PE. If you could possibly pick them up at 150, then that would be like a 20 or 19 PE. If you look at their year over year earnings, they're doing quite well for a gigantic company like them. I mean, they're looking to have an 18, what is that, 18, 24, it's nearly 8%, another 16%. So they're increasing their revenues and their earnings quite quickly or by quite a bit. We can also look at their profitability. They have return on capital, let's see, return on common equity, they're in that range I like. I like to see above 30% if at all possible. And I like return on assets right around in the teens, like 13 up to, anything higher than 13 in my mind is, you can tell it's a well-run company. They're over 20%, 21.52 for return on assets. They have tons of cash that they produce, and they don't have much debt. They have very little debt. Growth, you can also see they've got good revenue growth, nearly 14%. They have fairly good year over year income growth. So for a gigantic company that's growing pretty quickly, they have a lot going for them. If we compare them to a company like Palantir, which I also like, you can see here, Palantir's got an 82 PE compared to Alphabet that's got, 22? You might say, well, maybe Palantir is growing a lot quicker, but we can compare, and it's very similar. I mean, you've got, 8, 11, 18, 62, which again is very similar to how quickly Google is growing. So they're pretty similar, but you got to remember Google is such a bigger company. Some of the stuff they've done recently, I know they kind of tripped over their AI stuff, but recently they've had some their recent updates to the Google browser and the Chrome browser actually has AI kind of built into it, which I've noticed my Google searches have gotten a lot better, and they provide some of the same stuff that MSN and Pilot does. So they're making changes, and it's kind of like the Google of old. They're again doing some nice things. I also work with their Google Cloud and been very impressed with that, and I think they're bringing in a lot of good revenue. So, overall, just a good company. They're performing well, and the fact that let's switch back to Google, that they've come down and they're not so pricey anymore is a good thing. You can see here options volume. They typically have as much. They're usually within the top 5 with really good. So this is next Friday's expiration. You can see they have some really good premium. This literally being a week out, you could sell a 167.50 and bring in $2.28. I'm not saying that I would do that, but quite a bit of premium. If we went a little farther out, like we went out to August 16th, you can see it goes up even more. Not a huge amount, but I like this 160, 150. Now, I probably would look at doing a September trade. Let's look at what September looks like. And here you can see a 160, 150 would bring you in almost $200 per trade. You could even go down to a 155, 145 and still bring in some pretty good premium. So overall they have plenty of options premium. It's like I said, they're right up there with Nvidia and Apple and Tesla and everybody else. But just the fact that you're not paying a huge premium for them currently, in my mind, makes it well worth it. The next part of this video, I'm going to actually share with you my recent trades with them and what I'm looking at potentially making more trades on them. I might actually run the either the shielded wheel or the old-fashioned wheel, and we'll talk a little bit more about that in the next part of this video. Okay, here's the option chain for Google. This is actually, I like to do monthly, so this is for August 16th. You can see, even at a 20 delta, you could bring in 145. Let's see, is this the right one? Yeah, this is April 16th. So you could do a 160, 150, and you'll notice in a second, that's pretty much the trade I did recently. You could even go lower and do a 157.50. A lot of times I tell people to do near a 15 delta, which you either have a choice of 11 delta or 19 delta. So if you wanted to take less risk, you could come all the way down to this 11 delta, and the chance of Google going down to 155 is fairly slim. I would, if I was to do the trade again, I would probably do it at this level, at the 157, right around the 19 delta. But of course, at a 20 delta, you could make 145, and then I would go $10 out, which would cost me around $39 to $40. So I could make over 100 on every contract, and for literally 2 weeks. It would expire 2 weeks from Friday. Not bad. Now the other trade I would look at doing, you could even do weeklies or dailies with Google because they have so much activity. But I would probably come out 54 days. And of course, I'm doing this on a Sunday, so tomorrow would be more like 53 days. So you're talking less than 2 months. But here, 19 delta, you're bringing in nearly 200, and you could do a 155, 145 if you were doing a vertical put credit spread. And again, you'd be bringing in around 110, 112. You could say, well, I love them at 165. I'd rather pick up 485 in that time period, and then run the true wheel so that you would, if you got assigned, your cost basis would be at 160. But you would be, then when you sold a covered call, and if you're not sure what the wheel is, the basic wheel is you sell a put, you get assigned, then you sell a call, then you get assigned, and you pick up premium both when you sell the put and when you sell the call. And by doing it, pretty frequently, you end up bringing in a lot of premium. So in this case, if I got assigned, then I could come over here, I could, then sell a covered call at 165. And then bring in quite a bit of premium doing that. And if you wanted to do it with only 2 weeks, and you could also do it here, you could pick up 272 and for literally 2 weeks. So you could potentially do it every 2 weeks. So again, if you got assigned, you'd be between 165 and 160. So you could sell a call over here 2 weeks later, expiring in a weekly, and again, bring in some pretty good premium. Like if we go out 2 weeks, which would be 33 days, you can see it's still quite a bit of premium at 165. So running something like the covered call on Google, you could really bring in some pretty good premium. Now I'll show you, this is my Patreon. So this is the trade I did literally last week, 4 days ago, you can see. So I sold a put credit spread at 160, 150. And since then, Google has come down another $5 or $6, so you could pick up more than what I picked up here. So I picked up 195.30, and it's just showing that I've made right around a 68% return. This was at a 15 delta. When we were just looking at it a minute ago, it was a 19 delta. And this is just mentioning that I could have gone with a little bit more risk. and brought in quite a bit of more premium. But I'm glad I didn't, because it continued to go down, and I may have the opportunity to roll it here again in another week or two, since they went out to 920. But so I probably won't roll it again, but I may do another trade on it. But I did this with two contracts. The one I did a while back, I'll show you that. This is what I call my shielded, and this is my Discord. I share my trades both in Discord and Patreon. To become a member in Discord, you have to be in the trader club or the coaching club. But here, the way what I'm calling the shielded wheel, it's a typical wheel trade, but instead of selling a vertical put credit spread or a cash secured put initially, I'm buying 100 shares, then I'm selling a vertical put credit spread. In a way, it's I'm taking more risk, but then also taking less risk. And then what I would do is about every 60 days, which I'm right at that point again, I would run the trade again, and then pick up another 100 shares. Then I would potentially do one vertical put credit spreads, two covered calls, and then the next time it would be three covered calls, and so on and so on. I can show you what that looks like. So if we go over and we look at this trade, hopefully you can see it. But I did a buy to open for a put and then a sell to open. So I did a 165, 160 for the put spread. So not a very wide spread. And then I also did a covered call again, because I had bought the shares and I'd spent about 100. I think I paid 171. But here you can see I actually brought in $413, which goes towards those purchase of those shares. Now, since I made this trade, I'm trying to get out of that. But since I've made this trade, it's actually expired. And now the trade I just showed you over here in my, let's find it, that I shared literally earlier this week was more of a vertical put credit spread. But like I said, I may also look at doing either another shielded wheel and pick up another 100 shares, because I would love to own 200 shares of Google. I also like Apple, but Apple's a little bit pricier now. I'd rather it come down. But if I can pick up Google and around 160, I do. Like I said earlier, I feel like it's a good opportunity. So both these trades have worked out well. The shares right now are a little bit in the money, so my cost basis I think is like 166 or 167, but I do think Google will probably bounce again. But in the short term, there may be still a great opportunity to make a trade. So that's what I wanted to share with you guys. If you're interested in my membership or learning more about it, details will be in the description. I encourage you to take a look. It may be worth your while. As always, please subscribe, hit that like button. I'm trying to get the word out, but I just wanted to talk about Google in this particular video. I probably made it a little bit too wordy, but I encourage you to take a look at Google. It is at a reasonable price at this time. If you disagree with me or just want to add a comment, I typically answer all my comments. If typically within 24 or 48 hours, but if you disagree, or if you think this is a good trade, or if you think there's another company that we should be looking at too, please leave that in the comments. And as always, thank you for joining me, and I look forward to seeing you next time.